Hey guys, and welcome back to the ASX Investor channel, and welcome to another CEO interview. Today, we are looking forward to unpacking the Lake Resources story. We know it's a company playing right on the frontier of this new renewable energy transition. They're a lithium company that are hoping to feed into the EV adoption around the world as well. They've got their flagship Kachi project located in the Lithium Triangle, and today they're coming off the back of a significant announcement regarding their technology partner, Lilac. We're going to be unpacking what the deal means, what the technology means, and also what it means for the ASX LKE story moving forward. It's an absolute pleasure, as always, to have you join us. Welcome back to the channel, Steve.
Thank you very much. And thanks very much for anybody listening in. I do appreciate you following these stories, and it's great to update you on this one.
It is fantastic to have you back with us. Of course, we'll unpack everything that's happened with Lilac, but maybe just for a bit of a refresher, could you give that overview about what the flagship Kachi project is and how everything's been progressing recently?
Absolutely. So Lake Resources has 4 lithium brine projects in the Lithium Triangle in Argentina. And the reason that's important is they're all large, low-cost, expandable projects. But to bring those to fruition, you've got to do something that delivers into the new market, into this space we're in now, which is demanding quality and demanding better ESG outcomes. So that's why we've gone down this direct lithium extraction technology approach. All right, so how do we do that? So we did a pre-feasibility study to show that it worked. We've done benchtop test work and also pilot work in California to show that technology works. So we've got that data. We're putting that at the moment into a definitive feasibility study. It should be finished about the end of Q1 or just dribbling into Q2 next year. And about the same time, we'll have our environmental social impact assessment. Now, those 2 things are important because then we can have the debt financing. You have to have those to get the debt financing in place. We announced recently that an export credit agency from the government of the UK is prepared to advance debt capital to us for a period of 10 years at low cost to finance this project. 70% of the total finance, they've said we're good for that. Some of it will come direct lending at about 1.82% interest. Some of it will be guaranteed other banks, so that money will come to us at about 4, 5, 6% interest, but very much low cost in comparison to others. And that's the bulk of the finance we need. Then on top of that, on the equity side, those of you who have been following the story and are like shareholders would be familiar with our bonus option, where we went out and said, yes, we could go to fund managers and brokers and raise money, but it'd be great if we could get our current shareholders to actually work with us on the development of this project. And so we did this bonus option 1 for 10 deal, where you could get our bonus option at 35 cents for every 10 shares you owned. That comes due 15th of October. And if you convert those, and of course they're well in the money, then you get an additional option at 75 cents. And honestly, if this thing isn't well above 75 cents by June next year, then the capital markets globally have created rather than what we're doing, because we continue to de-risk the project. So in total, if I could summarize that, the project is virtually financed. It's certainly 2/3 of the way there on equity. On the debt side, yes, it's an expression of interest, but that basically means as long as we do what we said, definitive feasibility study, environmental, social impact, and off-takers, then that money is there. Off-takers are falling over themselves to try and get supply at the moment. So we've done this last de-risking that we announced today by getting Lilac to co-invest with us.
And as we start to talk about Lilac, it would be interesting, I guess, to give that overview. I think many investors would be familiar with the spodumene and then also the traditional lithium brine evaporation methods. But what is Lilac's direct lithium extraction method, and what could this mean for Lake's story, and why is it so important?
Okay, so the thing is, the great part about lithium brines, as I mentioned, is that they're large and they're expandable. But the traditional method of developing them is to use solar evaporation. And so you put them in ponds, you evaporate the water away, you concentrate the salts, and then you separate the lithium out from it. Nothing wrong with that process. But in the last 5 years, battery technology has improved, the need for high quality products has increased, And there's also environmental concerns about, well, what happens to that water? Why are we just evaporating into the atmosphere in a hyper-arid environment? So that's why we went down the path of doing something better. Part of it is to produce, as you see above my name there, part of it is to produce high purity, because that's what the battery makers want. And the other part is doing it in a clean way, which is what the electric vehicle makers and their consumers want to see. We don't want to just repeat what we did last time with gas guzzlers. We actually want to do it better this time around. And so we deliver into those two things. The real beauty of this particular Lilac process they use is that the water use is quite small. We turn virtually all the brines back to its source and a very small amount of processed water. So it's quite an elegant solution.
And then that brings us to today's big announcement, culminated in some clarification about the partnership. Some funding came through as well. Can you just unpack the announcement and what you think it means for ASX LKE moving forward now?
So people who have been following this Lake story know that we've partnered with Lilac for quite some time, back in 2018. And we've been working with them, testing at benchtop, testing at a pilot scale to make sure their technology works. And the difference in the relationship between our two parties is that we're going to be with them for the life of this project. So the traditional method when you come to new technology is you license it. You pay a royalty, you pay an annual or a monthly fee, and you use their technology. But Lilac wants to jealously guard their IP. And so to do that, we've partnered with them, and they will be both providing beads and modules as well as running those ion exchange modules for the life of the project. 12 months ago, the risks to that were of getting funding was to get somebody from the supply chain to co-invest. But this year, the equity markets have opened up. We've been fortunate to source debt. We know that off-takers are falling over themselves to try and secure supply, but investors still have a concern around either the Lilac technology or how well it would work. So what better way to actually have them co-invest at the asset level and say, hey, we don't just think it's work, we're going to put our money where our mouth is. And they could have even put their money up now, but we would still have questions, oh, how well does it work? So they earn in progressively, demonstrate how well it works, get the qualification testing with battery makers, and then put their money in. So we think that that adequately de-risks the project and pretty much this financing in place to get this thing underway.
Because as you mentioned, there's a few different stages of the funding that will flow through upon success. So I would love for you just to break down what those different stages are and what it also means for the valuation when considering it as well.
Okay. So first of all, Lilac themselves earn in 3 steps. The first one is relatively straightforward. That is the work that they've been doing now and recently, and they're going to self-fund that going forward. Then that will earn them 10% of the Kachi project. The next key 10%, they not only need to self-fund the demonstration plant on site, but they need to demonstrate that the 2.5 tons of lithium carbonate equivalent they produce is that ultra high quality. And we've targeted around 99.95% or better. So we're quite confident that's going to happen, but they then demonstrate that. And then the last 5%, they work together with us, with the off-takers, but particularly to get that product qualified, because that qualification means a lot. It means that when you start production, you get straight into production producing a high-value product rather than spending 6, 9, 12 months getting that qualified. So it's an important key step. And then that money they're putting in, that comes from the tech sector. And this is going to be the very first investment by the tech sector into the upstream end of the whole battery supply chain. I mean, these guys have made money in tech, they've made money in electric vehicles. To see them now co-investing with us, it's pretty exciting.
It is an exciting time. And I think to give that overview for investors who might not be familiar with them, who are actually Lilac? As you mentioned, they've got some significant backers as well. And what is their mission?
So Lilac Solutions is an unlisted company based in California, just across the bay from San Francisco and Oakland. They have come up with a technology that is very well known. It's been well known for more than 70 years in water treatment, more than 40 years in uranium production. 50, 60, 70% of the uranium is produced using ion exchange. It's quite well known. It's a process whereby you design a bead and you work out the metal you want to take out of the water, and you design it to do that. And what Lilac have done is design a bead that will take lithium out of the water, or in our case, a brine or salty water, and do that in a very selective way, and that bead lasts a long time. So that's essentially their IP, their technology. And what we like about it is it's so simple, because you produce lithium chloride, which is what you do out of an evaporation pond. You do that in a single step. You do it in a few hours. You get virtually all of the lithium out of the brine rather than just half. So it's efficient as well as producing a high quality product. So Lilac are a startup. I mean, we see lots of startups coming out of Silicon Valley, but their backers are really quite significant. So in February last year, they announced their Series A funding round. Breakthrough Energy Ventures is their main investor, and they're backed, well, it's a Bill Gates-led Breakthrough Energy Fund. They also have the backing of other people such as Jeff Bezos, Michael Bloomberg, Jack Ma. Recently, Andrew Forrest also put some money into them. So they've got some pretty sizable backers, and plenty more where that comes from. Breakthrough Energy Ventures raised another US $1 billion in January, February this year, also to put to work to this sector. Some others in there, the Grantham Foundation, very well-known philanthropic and successful investors. The MIT, Massachusetts Institute of Technology, very well known in new technology and breakthrough approaches. And they have a fund called The Engine, which is also invested in this. So it's serious money and plenty more that can actually come to bear.
It's significantly backed, and I think it really does position Lake Resources nicely. So of course, the resource tick funding, the pathway forward there has been set out. I think the next thing that investors will be looking for is off-takers. Are you able to provide a bit of an update on how those discussions are progressing?
I think I've shared with you before that we've been talking to both battery makers, cathode makers, as well as electric vehicle makers. And what we're seeking is to have a rise and fall pricing mechanism. So as price rises, we share in that. If it pulls back, we also share in that. Off-takers are more familiar with just having a flat price for a period of time. If we'd signed one 6 months ago, prices had just lifted from $6,000, $7,000, $8,000, $9,000 a tonne to trading between $10,000 and $13,000 a tonne. Okay, that would have been good. But in the last few weeks, we've seen the pricing for both lithium carbonate and lithium hydroxide lift from $11,000 to $13,500 a tonne to now in a range of $17,000 to $21,000 a tonne. So that pricing is just uplifted. Naturally, we continue to discuss how to get an appropriate arrangement for both parties. Then the second thing is that we're trying to do a tripartite agreement, because the electric vehicle makers want this product in their supply chain. They want to do anything they can to lower that carbon footprint and also have socially better outcomes. And we can actually deliver that because of the way we do things. Lower water, lower land use, better social outcomes. These, and still with a small carbon footprint, because we're going to be using a solar PV farm for energy. So some people still poo-poo this sort of stuff, but honestly, this is now very much a financial driver, particularly in the European Union. Now with Lilac on board, they're certainly better connected in the US, so that might generate some tension there. So we will be announcing those things, but honestly, we've taken the foot off the pedal because of the recent pricing uplift.
It's a formative day for the Lake story. Did you have any final messages or reflections that you wanted to share with those shareholders?
I just wanted to share with you that this pool of funding that's coming towards us is not coming from the natural resources mining space. It's not coming from the energy space. It's coming from the tech sector. They have large sums of money they could put to work. We've demonstrated that the process with Lilac is eminently scalable. And because of the size of the demand and the fact the debt providers are now there, we've moved from having 25,000 tonnes per annum as our target to 50,000 tonnes per annum. Now, 50,000 tonnes per annum in the next 5 years, that's going to put us in the top 5. That makes us larger than Orocobre. That makes us larger than Livent. Livent, our nearest neighbour, produces 16,000 tonnes per year, and they have a valuation on the New York Stock Exchange of $4.5 billion US. So there's plenty more of upside in this story. Now we have to continue to de-risk it, but the fact that we've got the debt in place, most of the equity, the offtake will announce, and we've also got our technology partner directly investing in the project. This is going to happen. And then we'll start talking about our next project. So thanks so much.
That is the Lake Resources story. It's ASX LKE. On the OTC markets, it's LLKKF. Steve, it is always a pleasure. If you guys did enjoy the video, don't forget to hit the thumbs up button. Feel free to share it out. If you're new here, welcome. We make daily videos, so make sure you've subscribed and turn your bell notifications on. Thank you for joining us, Steve. Congratulations on a big announcement. We'll continue to watch the story moving forward.
Cheers for now.